Welcome again on behalf of TEXPROCIL. It gives me great pleasure to welcome you all to today's webinar on what we consider to be a very important subject, which is not very clearly understood. So this is the topic is bonded warehouse manufacturing. And it's called MOOWR, Scheme for Textile Exporters. Basically, it's a short form for bonded warehousing. We have found that other countries like Bangladesh, Sri Lanka, even Bangladesh have tried to use it in one way or the other. But somehow in India, we have not been able to sort of really look at it very seriously. So this is an opportunity today to understand what the scheme is, how does it operate, and how you can benefit depending on what is the exact location of your business and the type of business that you're doing. As you all know, friend, we are in the global trade environment continues to be grave in the sense that exporters are constantly seeking mechanism that can improve competitiveness because some challenge or the other is coming up every day. We need to optimize our costs and provide and be operationally flexible. And therefore, when trying times and time through which we are living today, when these present ourselves, we should look at what other models can be adopted or used so that we can maximize our operations. In this context is MOOWR scheme, which is manufacture and other operations in warehouse, bonded warehouse manufacturing. Basically, bonded warehouse manufacturing operates a scheme announced by the CBIC. It has emerged as an important initiative, offering manufacturers opportunities to undertake manufacturing and other operations in bonded warehouse while availing duty deferment benefits. The scheme has gained significant attention due to its potential to improve cash flow management and support long-term business growth. But the growth has not been, we have not seen many textile companies getting attracted to this. Therefore, it's important to understand these parameters of the scheme and to see how one can use it. So today's webinar is to create awareness and provide a practical understanding of this MOOWR scheme and its relevance for the textile sector. Through this session, we aim to help exporters to understand the operational framework, yes, evaluate its financial advantages, there are some advantages, and explore how this scheme can complement existing export promotion initiatives. During today's session, our experts will cover several important aspects, including understanding what MOOWR scheme is and its key features. It's important to understand because not much of publicity has been given. Exploring various options available for duty-free imports, developing a basic understanding of manufacturing in bond, understand the correlation between the present scheme, bonded warehousing, and foreign trade policy schemes, guidance on the application process, along with frequently asked questions, insights into the financial benefits and business advantages under the scheme. I'm very confident, as you would have seen, a very comprehensive range of issues concerning the scheme will be addressed, which will be very enlightening and help us understand the matter in greater detail. So we are privileged today to have a very eminent speaker, a highly respected faculty in this field, Mr. Sudhakar Kasture, Director of EXIM Institute, who will be guiding us through this scheme. In fact, as you might have seen, Mr. Sudhakar Kasture has been associated with TEXPROCIL and has been coming up and guiding all our members to understand specific issues and topics which we believe need to be very carefully understood. And with the help of an expert, we are all trying to unravel the exact scheme and what exactly it stands for. I would like to introduce Mr. Sudhakar Kasture for you. Mr. Kasture is a well-known personality in the field of international trade. He has over 40 years of all-round experience in the field of imports and exports as a consultant to SMEs and many trade bodies. He heads the EXIM Institute, which imparts training in the field of international trade. He also mentors young management students at the Indo-German Training Center, Mumbai, where he is visiting faculty. He has been an advisor consultant to many LSMs like HUL, Siemens, Godrej, Blue Star, and practically big companies, SR Oil, MRPL, BPCL, Godrej Industries, Eternis Finance Chemicals, Marico, Huber Group, Century International, Raychem, I mean, I can go on, RPG, Vedanta Group, Wellspun Group, Zen Technology, Thyssen Krupp. So across sectors, not only textiles and also textile companies, he has been helping out. I encourage all the participants who have joined today to kindly actively engage during this session. Idea is not to just give a lecture or a monologue. Idea is to have an interactive session. If you have doubts, queries, questions, please ask them, because the objective is to clarify the entire matter so that everybody goes home a little wiser than they were when they came and joined this meeting. So with these few words, I once again welcome all of you. I really thank you for taking time out and joining us, because we consider it's an important subject and it's a highly informative and productive session is before us. So Mr. Kasturi, over to you. Thank you very much.
Thank you, sir. Just allow me 1 second to put the PPT on. What's the name? So we are starting with manufacturing in bond. MOOWR scheme 2019.
Okay, hello.
Just 1 sec.
Yeah, okay, carry on, carry on.
Right. So, as you see, the scheme was introduced on 2019. And what we are going to go through is complete details. What is the scheme? One specific thing I have done for this presentation, there are questions.
Sir, screen is not visible.
Screen sharing is paused.
Okay.
Now it is visible?
No, sir. No, sir.
Just 1 sec. Can you see the screen now?
Yes, sir.
Yeah. So we are going to look at, and one specific thing I have done for you, the questions which you normally ask, I have a good consolidation of those questions. So I'll be taking them. And towards the end, we again have, if you have any additional question, but my way of thinking is that most of your questions will automatically get answered into this. What is manufacturing in bond? This scheme is introduced under the Customs Act 1962. Section 65 of Customs Act allows you to conduct manufacturing and other operations in a custom bonded warehouse. The initiative was primarily for promoting investments in India, enhancing ease of doing business, Make in India program encourage exports. And one of the best example of this, a successful example of this is mobile phones, how mobile phones exports have increased from India, how assembly started happening in India, and now core manufacturing of components also started happening in India. This is something that what we need to understand and understand with reference to our practical activities and in a very, very simple manner. I'm trying to do that. What are the options available for you for duty-free imports, which most of you are connected with? You are importing inputs under advance authorization without payment of duty. You are importing capital goods under EPCG scheme, again without payment of duty. But in both the schemes, what is most critically important is you are subject to specified export obligation. In other words, these schemes work only for the purpose of exports. Are they useful for domestic production? Technically speaking, whatever material you import under advance authorization, whatever machinery you import under EPCG authorization, primarily aimed at increasing your exports, and concessions are granted to you subject to specified export obligation. If you do not complete the export obligation, government is likely to demand whatever duty you have saved plus interest, and that too penal interest at 15% per annum. Under EOU scheme, same story. Capital goods are allowed to be imported, raw material components are allowed to be imported, and depreciation is also allowed to be imported on capital goods. You are supposed to pay duty when you debond from the unit. Under SEZ scheme, again, it is considered deemed foreign territory. So you have similar kind of duty exemptions available, again, primarily for the purpose of exports. So they are export centric. This new scheme, mark this point carefully, where this new scheme equally applies to domestic production. And one simple way to understand it is because here the word utilized is not duty exemption, but duty deferment. You are getting deferment of duty. Another interesting aspect, there is no liability of interest irrespective of the period. If you import something and put it in a bonded warehouse, normally you have 90 days period. After 90 days, government says, I will charge you interest. In this particular case, no interest is chargeable. There is no specified period for it. And since this scheme is purely for the purpose of manufacture in a bonded warehouse, it also helps you increase competitiveness for the domestic market. That is the greatest advantage of this scheme, that it combines both exports and domestic. What are the main features? A single application cum approval form. No geographical limitation on where such unit can be set up. When you think of SEZ, you have to go into SEZ. It's a delineated area. You have to move. Here, there is no such condition. Unit can import goods, both inputs and capital goods, under a customs duty deferment program. The duties are fully remitted if the processed goods are exported. There will be no interest liability. Units will benefit through improved liquidity. How we'll look into it in all details possible. GST compliance goods can be procured from the domestic market. A single digital account has been prescribed for ease of doing business and easy compliance. The scheme would also enable efficient capacity utilization, as there is no limit on quantum of clearances that can be exported or cleared to the domestic market. In case of export-oriented unit, when the original scheme started, government said 66% production you will export, 33% production I will allow you to sell in domestic market. That was the condition. In MOOWR scheme, there is no such condition. I have discussed this with a very senior officer in customs, and I have asked this question. Suppose I don't export anything, he says still there is no problem. So you can imagine the kind of benefit that you have. Now I'm going to explain from a textile point of view, so you'll get an idea. Second question comes about monitoring. When you operate under FTA schemes, there is multiple monitoring. In all these schemes, advance authorization, EPCG, EOU, deemed exports, whatever you talk of, monitoring authorities, DGFT and customs. So there are two authorities. Even if you are EOU, there is another version, Development Commissioner, jurisdictional GST, customs authorities. So you are controlled by more than one department. And naturally, there are more than one kind of compliances. When you take an advance authorization, you import something duty-free, you are governed by the conditions of the foreign trade policy. Simultaneously, you are also governed by the conditions of the customs notification. And both insist on compliances, different kind of compliances. You are executing a bond. If required, you are executing a bank guarantee. Then you have to look at all the orders, maintenance of documents, compliance at every single point of time, revalidation of licenses, extension of export obligation period, n number of procedural aspects that keep happening. And if you are operating on multiple licenses, every time you pay application fee. Every time you have to submit a chartered engineer certificate. Number of things happen which are in the form of compliances, and that takes not only money, but also takes your additional time. Then everything is governed by separate regulatory controls. Everything is subject to amendment, notifications, public notices, trade notices, circular issues. And nowadays, new things also start coming in. You have BIS standards, you have QCOs, n number of things that get added. And compliance and continuous compliance becomes a very, very serious issue. Manufacturing in bond is supposed to end all this, as it is governed by one single authority that is called customs. Which steps are necessary? Which needs to be carried out? The first, application process. Application to the jurisdictional principal commissioner or commissioner of customs. Execution of triple duty bond before granting permission for warehousing license. Bond amount is 3 times of duty deferment value. Bond is required to be executed after verification of premises by customs and before issuance of warehousing license. In other words, MOOWR scheme, in order to issue the bonded warehousing license, applicant is required to execute triple duty bond as per Annexure C. Grant of sanction or permission, Commissioner of Customs grants the permission for manufacturing and other operations. Once you complete these 3 steps, you can start manufacturing and other operations associated. This is the list of documents. Copy of IEC, PAN, Udyam, GST, bank account details, common, which most of us all have this. Aadhaar copy, address of proposed site, manufacturing unit, along with ownership documents. Anywhere, whenever you go establishing a manufacturing unit, this is bound to happen. Same documents are being asked here also. Ground plan, fire safety audit certificate, copy of AO certificate, if any, details of good, descriptions, HS codes, and what is the nature of the goods, consumables, packing material, capital goods, fares, what is supposed to be procured domestically from the local market, all those things, input-output ratios, either based on standard norms or ad hoc norms, anticipated trade volumes, export, import, local sales, total purchases, at least for 5 years. So complete manufacturing plan is required to be submitted. And that is necessary anywhere you go, any kind of establishment you go, everybody is going to ask. And why they are asking for a 5-year plan? The reason is very simple, because you are being given duty deferment. Duty deferment means I will not collect the duty at the time of importation. When it will be collected, we will see that. General continuity bond, bank solvency certificate, insurance, ITR and balance sheet of company, appointment letter of warehouse keeper, work experience certificate of warehouse keeper, and board resolution, which are primarily supporting that if you are a private limited or a public limited company, the board has approved this activity that you wish to do. Now let us start FAQs. Why I want to insist on FAQs? Because it answers all your operational queries. Each one. I have selected FAQs based on that so that you get a complete idea on this. Who is eligible for applying for manufacture and other operations in a bonded warehouse? A person who has been granted a license for warehouse under Section 58. A person who can make a combined application for license for a warehouse under Section 58 along with permission for undertaking manufacturing and other operations in warehouse under Section 65 of the Act. The persons mentioned have to be a citizen of India or an entity incorporated or registered in India. In other words, either a new fellow, new company, or if you are already an existing manufacturer and you want to convert yourself into, both are permitted to do this. Can a factory which is solely into manufacturing goods have to be sold in the domestic market? Eligible for applying for manufacture and other operations in a bonded warehouse? The answer is the eligibility of a factory for manufacture in a bonded house does not depend upon whether the final goods will be sold in the domestic market or export. Very clear. In other words, this will be extremely useful even for domestic manufacturing. If you have a unit, a manufacturing unit, which undertakes both the activities, export as well as domestic manufacturing, please understand you are going to save duty on imported materials in totality. Now think of a situation. You have a turnover of 30 crores. 20 crores you are selling in domestic market, 10 crores you are exporting. So when you apply for advance authorization, you are applying for only 10 crores. You may take 5 applications in a year. So 5 applications you are undertaking for the purpose of 10 crore exports. For balance 20 crores, whatever you are selling in domestic market, you are supposed to pay the duty. Here this particular scheme says, irrespective of what you are exporting, what you are selling in the domestic market, I will give you upfront clearance of goods without payment of duty. When will you pay duty? If you are exporting the goods manufactured of using those imported raw materials, there is no question of payment of duty. You will export the goods under LUT. There is no question of reversal of duty. There is no question of payment of duty. There is no question of payment of any kind of interest. If you are selling the good in the domestic market, when you clear the goods from your factory, at that time, you will pay the duty applicable. Suppose you import the goods today and you are selling into the domestic market after a period of 6 months. Are you supposed to pay interest for the period of 6 months? Answer is no. You sell it after 1 year. Are you supposed to pay interest for the period of 1 year? Answer is no. When you are not paying the duty, you are not borrowing money from the bank. So you are saving on your cash outflow. You are also saving on your interest cost. And this deferment continues till you finally deliver the product. So you can imagine how it helps you in totally monitoring your cash outflows, which is extremely important in today's scenario where markets are difficult, prices are increasing, transportation cost is increasing. If you can save, and it's a huge amount of money. In normal circumstances, if you are saving 7.5% custom duty and 18% IGST, you are roughly saving 28%. If you are importing the goods worth 1 crore, you are not borrowing money from the bank 28 lakhs. And you are not paying any interest on that. Biggest saving for anyone one can think of in today's scenario. Now, very interesting question. Is an existing factory with solely manufactured goods to be sold in domestic market eligible for application for manufacture under this scheme? Yes. How will the existing capital goods and inputs be counted? You have already purchased your existing company wanting to move it. It says any unit in domestic tariff area is eligible for making an application for manufacture and other operations. Old factory in DTA domestic area is eligible for applying. The accounting form prescribed for the units undertaking such operations in a bonded warehouse provides for accounting of DTA receipts. Thus, the existing capital goods and inputs must be accounted in the accounting form prescribed. The form also provides a remark column in case certain remarks are to be entered. So there you can write these goods are imported, duty paid. So there is no question of reversal of any duty on those particular items. Capital goods imported under EPCG, you can make a remark under that. So that provision has also been made. Is manufacture and other operations in a bonded warehouse allowed in public bonded warehouse license under section 57? Answer is no, because 57 is a public bonded warehouse. It is not a private bonded warehouse. Private bonded warehouse is totally under your control. Public bonded warehouse is not totally under your control. A public bonded warehouse is a place where the warehouse keeper may store goods from 25 different authorities. So what is granted under 57 and 58? There is a clear difference between the two. Will a unit licensed under section 65 and section 58 of the Customs Act be under the physical control of customs? No. This is one of the greatest worries people have been asking me. Will there be custom officers sitting in my company? Answer is no. There is no physical control. The unit will be subject to risk-based audit. So depending on what returns you are filing, how you are giving your accounting, how good you are at maintaining your registers, based on that audit will be decided. Again, there is no definitely defined audit every year, etc. No, nothing of that sort. Can the license under section 65 and section 58 of the Customs Act be obtained on bare land? Suppose you want to start a new company. You have acquired new land and it is bare land with identified boundaries or a built structure is imperative. So the question is, if I take bare land, can I take benefit of deferment of duty? Answer is very beautiful. The answer is, the regulations do not mandate that a fully enclosed structure is a prerequisite for grant of license. But what is important? The site or building is suitable for secure storage of goods and discharge of compliances. So if you create a warehouse for storage of goods and if you have a properly compounded bare land with barbed wire fencing, etc., it is possible to obtain this. Then it also says, such as proper boundary walls, gates with access control and personnel to safeguard the premises. Everybody has this. Moreover, depending on the nature of goods used, the operations and the industry, some units may operate without fully closed structures. This is also possible that you don't require fully closed structure. The principal commissioner will take into consideration the nature of premises, facilities, equipment and personnel put in place for secure storage of goods while considering grant of license. That means if you have proper precaution on this, you want to set up a completely new unit, building is not yet completely ready, it may take 1 year, but still you want to import machineries and you want to keep those machineries ready, that is possible. You create a warehouse, strong warehouse. For storing, you need not even unassemble those machineries or assemble those machineries, start installation, not needed. You can still go ahead for this scheme. Do we need to renew license under section 58? Again, very interesting. The license and permission granted is valid unless it is cancelled or surrendered. Surrender when you stop operation. Cancelled, you have done something wrong and government has cancelled it. Only on these two circumstances. Thus, no renewal of the license under section 58 or permission under section 65 is required. In other words, Again, your compliance cost is less. You are not to go for annual renewal, or 2 years renewal, or 3 years renewal, nothing of that sort. Can a unit undertaking manufacture and other operations in a bonded warehouse import capital goods without payment of duty? If yes, whether only BCD or both BCD and IGST is covered? For how long is duty deferment available? Is interest payable after some time? All critical questions. Answers are very clear. You are allowed deferment on both the duties, BCD as well as IGST. If BCD is zero, social welfare surcharge will also become zero. They stand deferred till they are cleared from the warehouse for home consumption or are exported. The capital goods can be cleared for home consumption as per section 68. Read with section 61 of the Customs Act on payment of applicable duty without interest. So no interest. You want to debond after 10 years. Are you supposed to pay any interest on capital goods? Answer is no. The capital goods can also be exported after use without payment of duty as per section 69. So you have machineries. Tomorrow you want to bring about new machineries. The best option for you, sell these machineries which you are debonding from the warehousing unit to a LDC, least developed country. You bring new machineries, again you defer the duties, and when you sell it to outside India, you re-export them back. There is no question of payment of duty. There is no question of payment of interest. This is one of the best methodology available for second-hand goods. And this also helps you improve in technology as and when any technology improvement is required. The capital goods can also be exported as per section 69 of the Customs Act. Deferment is without any time limitation. Is import of raw material component without BCD or IGST allowed? Will there be any interest obligation if IGST is paid when finished goods are sold in domestic market? Understand, this is critical question. I am selling it in domestic market. I am not doing for exports. I am selling it in domestic market. If this is the case, what is the situation? Input raw materials can be imported and deposited in the license warehouse without payment of BCD and IGST. No interest liability arises when the duties are paid at the time of expanding of resultant goods. The duties without any interest are to be paid only when the resultant goods are being cleared for home consumption. So when you make a GST invoice you are sending, that time you will reverse the duty, but you are not going to pay any interest. Think of this. You import something in the month of May. Domestic clearance takes place in the month of December. Produce goods. If this is the case, are you likely to pay interest up to December? Answer is no. So your saving of interest continues. In a normal warehousing situation, interest free period is 90 days. Under the MOOWR scheme, it is unlimited. Would it be mandatory to appoint a warehouse keeper in the factory licensed under section 65? Would all goods cleared from the said factory will be subject to inspection by the warehouse keeper or custom authority? This is also one question that is continuously asked. Reply: warehouse keeper has to be appointed for a premise to be licensed as a private warehouse under section 58. The warehouse keeper is expected to discharge duties and responsibilities, maintain accounts, also sign the documents on behalf of the licensee. The warehouse keeper is expected to supervise and satisfy himself about the veracity of the declaration, accounts that he is signing. The inspection of goods by custom at this stage of expanding would be done only if there is indication of risks and not as a matter of routine practice. If some complaint is made against you, if something violative is found in the submission of documents, etc., then only this will come. Approval of the bond officer is not required for clearance of goods from the warehouse. So continuous requirement of such person is no more there. You need not worry about that. How frequently is an audit of a unit operating under section 65? The audit of units operating under Section 65 would be based on risk criteria. There is no prescribed frequency of such audit. Nobody is going to visit you every year. So what is most important? Your maintenance of accounts. You're following the rules. You're understanding the subject. You're understanding the compliances. And you are reporting only to one single agency, that is customs. Many times my observation has been people are worried about the moment you take the name of customs, they say, "Arey yaar, kya problem hoga, kaise hoga, ye hoga." Let me tell you one thing. If your documentation is correct, and in today's scenario, the documentation is electronic. If you have proper connectivity of document, you need not worry about anything. Because entire thing, whether you like or you don't like, if you study ISGate 2.0, everything is recorded. Never be under this impression that I will do something other fellow will not know. Your bill of entry is registered. Entry of goods into your factory registered. Your vehicle timings are also noted. Everything automatically is being done. You think of, you have a CCTV footage. Can I not check which truck has come at what time? Your shipping bills already available online. Your GST returns online. Your drawback applications online. Whatever you may think of is completely online. Therefore, don't get worried about what will happen if somebody comes, whether audit will take place. It is your responsibility to maintain it. Absolutely. What are the customs document form for movement of imported goods on which duty has been deferred to and from a unit undertaking manufacture and other operations in a bonded warehouse? Are such goods required to be under customs escort? Answer is no. Custom station to Section 65 unit, bill of entry for warehousing, very common, you all know, inbound bill of entry. It is clarified that no separate form is prescribed for movement from custom station to Section 65 unit. So, normal circumstances, the way you bring goods to a bonded warehouse, similar fashion, you will bring these goods. From warehouse, non-Section 65 to Unit 65, form for transfer of goods from a warehouse as prescribed under the Warehouse Goods Review Regulations 2016. This is because warehouse which is not a Section 65 unit has to follow the Warehouse Goods Regulations 2016. So you got to follow that. From Section 65 unit to another warehouse, the other warehouse can be a 65 unit or non-65 unit. Form prescribed in manufacture and other operations warehouse, form number 2, regulations 2019. You have to look at. So, warehouse goods removal regulations 2016. Other operations in warehouse, again, regulations 2019. If you look at these two regulations, you will automatically understand how the movement will ultimately take place. If the imported capital goods are cleared for home consumption after use, is depreciation available? No, depreciation is not available. This issue has been represented to Government of India. Since in the EOU scheme you allow depreciation of goods, you should allow depreciation of goods here also. Maybe in future this will get solved. Currently, depreciation is not available. That's why my suggestion to you, after 10 years, when you want to change the machinery, re-export the capital goods to a third party, sell it to someone in an LDC. Even if you get less amount of money, you will not have to reverse any duty. And there is no question of payment of duty. If you are re-exporting the capital goods, you can take a chartered engineer certificate. What is the value on the date of dispatch of those goods? And based on that, you can re-export the goods. The imported capital goods, if the imported capital goods are cleared for export after use, depreciation available? No. Imported can be exported without payment of duty as per Section 69. So depreciation question does not come into account. For the purpose of valuation of export goods, the same will be as per Section 14 of the Customs Act. Read with custom valuation rules. So you can check the rules. You can see what is the market price of those particular goods and you can go ahead with that. Can all benefits under FTP and customs rules 2017 be taken in bonded warehouse? Naturally, when you are not paying duty, there is no question of claiming drawback. Can I claim ROSCTL? Can I claim RODTP? Of course, yes. And it is very clearly mentioned. The eligibility of export benefits would depend upon the respective schemes. If the scheme allows unit operating under Section 65 has no impact on the eligibility. In other words, a unit operating under Section 65 can avail any other benefit if the benefit scheme allows. So ROSCTL, RODTP cannot be denied under this scheme because they are nowhere related to customs duty or IGST. You are not claiming drawback because you are not paying the duty. What will be the method of inventory control? The general accepted accounting principles will be followed in inventory control in a Section 65 unit. FIFO method can be followed, first in, first out. Again, all your bill of entries are listed, all your shipping bills are listed, all your GST invoices are listed with dates. So you can keep a complete track. At the end of the day, your account maintenance has to be perfect. Procedure and documentation requirements for re-entry of manufactured goods. When this happens, if goods are returned by the customer, if it is capital goods, maybe for repairs, in case of your TEXPROCIL products, there is no question of capital goods. You are not manufacturing any capital goods. So it is raw material. Raw material never goes for repair, so that is out of question. The only question remains, if the resultant goods cleared from the warehouse are returned by the customer for whatever reason or they rejected. So there are two provisions. After repair, when the same is cleared from the warehouse, the same will be entered in the prescribed accounting form. If the goods were exported and subsequently rejected or sent back for repair, then the goods upon re-import have to be entered as imports, receipt in the accounting form. The relevant customs notification for re-import has to be followed while filing bill of entry for re-import of the goods. There is clear customs provision, re-import of exported goods. Whatever duties mentioned there, those have to be paid. Otherwise, there is nothing to be paid. You can clear it on payment of GST because you have already got the refund of GST under, or you have exported the goods under LUT. So there is no GST implication. And then you can take the credit for whatever duties that you pay. But there is very clear-cut provision made. So repaired goods and return goods both can be taken care of. What will be the treatment for restricted items? If the item itself is restricted, naturally, when entry of the product is subject to licensing, you have to get the approval. For this, please refer CBIC instruction 26 February 2016. File number is given, where it has been clarified that all regulatory checks shall be applied at the into bond stage for a bill of entry for warehousing. Somebody can ask, can a prohibited item be imported under Section 65 unit? Answer is no. Can a restricted license is required? Answer is yes. Let's be clear on this issue. All compliances are required before the goods can be utilized in a Section 65 warehouse. If in normal circumstances, when you want to file a warehousing bill of entry, item is restricted, customer is going to ask you, show me the license for import of restriction item. Then only I will allow clearance of these goods. Same principle applies here. How is hazardous cargo to be treated? Hazardous cargo has to comply with all extant laws. The way you are importing chemicals, hazardous chemicals, and storing in a manufactured unit, same principle will follow in case. However, in case of textiles, I don't think this will matter much. If there is some specific product that you require in the process of manufacturing, you can comply with the required legal requirement for that particular item. Can an existing warehouse licensee apply for section 65 permission? Do they have to file a new application? Please refer para 4, circular 34, wherein it has been clarified that applicants can seek a license under section 58 and permission to operate under section 65 synchronously, simultaneously, or request for permission under 65 if they already have a warehouse license under section 58. Both permissions are open to you. Either you apply for both or you already have one, apply for another. At what stage the PGA clearance required for bills of entry relating to warehouse? Please refer to CBIC instruction. In the matter where it has been clarified that all regulatory checks shall be applied at the into bond stage of bill of entry for warehouse. So any clearances, any NOC required, that is at the time of beginning when you enter the goods into warehouse, normal circumstances. Regulation 7 requires that a person who has been granted permission under Regulation 5 shall appoint a warehouse keeper who has sufficient experience in warehousing operations and customs procedures to discharge function. Can a custom broker be appointed as a warehouse keeper? Answer is very elaborate. Yes. A person who has passed the examination referred to in Regulation 6 or Regulation 13 of Customs Broker Regulation may be appointed as a warehouse keeper. There is also no bar in appointing any person who has sufficient experience in warehousing operations and customs procedure. So any trained person you employ who has necessary registrations, necessary certification, absolutely no problem. You can continue with your work. Can existing AEO continue to get AEO benefits once they are converted into MOOWR scheme from DTA, EOU units, etc.? Answer is operating under section 65 has no effect on AEO status. All benefits available as an AEO continue, notwithstanding operations under section 65. Whether at the time of filing of export bill of entry, the importer can claim exemption from custom duties as may be applicable under various customs notification. Very important. Understand this. There is somebody in a domestic market. He has applied for advance authorization. He has got invalidation made, endorsed in your name. You are a section 65 unit. How will you supply the goods? The reply is, as per Section 15(1)(b) of Customs Act 1962, the rate of duty in case of goods cleared from a warehouse shall be the rate on the date on which a bill of entry for home consumption is presented. Thus, the importer can claim exemption from custom duties under various customs notification as may be applicable on the date on which a bill of entry for home consumption is present. So you have advantage of this situation also. How would the valuation of the imported inputs be done for the purpose of payment of customs duty? It will be as per section 14. In other words, it will be governed by Notification 94, Valuation of Imported Goods, Valuation Rules, 2007. Any additional information you require is available on this link and you can check that. These are all departmentally answered FAQs. So this is not my answer. This is not my personal answer. This is what Customs Department has answered. So you can verify this link because there may be more questions. They'll keep on adding subsequently in future. If any further clarification is required, that will also be provided on this website. Provisions for job work. Originally, this was not there. Then there was a question raised. I am a section 65 unit. Some work I want to carry out outside. I want to get something done outside. Can I do it? Job work shall be subjected to following conditions. The goods upon import should be first deposited in section 65 unit, duly accounted before sent for job work. It should be possible to establish identity correlation of goods after job work has been done. On completion of job work, goods can be brought back to Section 65 unit or exported cleared from DTA directly. So you are a fabric manufacturer, you supply the fabric, you got an order for ready-made garments. You got the ready-made garments done in some other unit. You have two options. Bring the ready-made garments back to Section 65 unit and export. Otherwise, you can directly export from the job worker's premises. This also saves your cost. In cases goods are exported cleared to DTA from the job worker premises, procedure as per regulation 14 and 15 shall be followed. So prescribed procedure is given. And the date of removal from job worker's premises shall be deemed to be the date of removal from the warehouse. So absolute clarity, you can maintain those dates, include in your consumption register. Scrap, waste and remnants generated during job work shall be either returned to Section 65 or cleared from job worker premises on payment of applicable duty. Procedure and timeline for return of goods under Section 65 in line with GST provisions. Account to be maintained by Circular 34/2019 will be kept updated as regards to job work at all times. And then very interesting aspect. In case of molds, jigs, tools, fixtures, tackles, instruments, hangers, patterns and drawings are also permitted to be sent to job workers' premises, subject to accounting. So take care of accounting. Job work for others. Can you do job work for others? Yes, that is also permitted. In case of imported goods which are warehoused or consumed during the job work process, duty shall be paid on such goods by filing ex-bond bill of entry when such job work goods are returned to the principal owner. In case of goods after job work are exported from the premises of the Section 65 unit, the import duty on warehouse goods used for job work need not be paid as per Section 69. So what operations you are doing, this is also permitted. So you can do job work outside Section 65 unit. You can also get the job work done in Section 65 unit for some other exporter or some other manufacturer as a contract manufacturer. Both are possible. And these are the core regulations, the notifications related to this. This is for your reference. You can check these details from the reference. Now let us come to a very interesting point that is part of summary that I am talking of. What are the financial benefits of the MOOWR scheme? Payment of custom duty IGST is deferred, which results into reduced cash outflow and blockage of funds. Think of on some product which you are importing, the custom duty is 20%. And let's say GST is 18%. So roughly 40% cash outflow you are saving. There is no blockage of funds and there is no question of payment of interest. Second, import of inputs, capital goods under advance authorization and EPCG, no more needed, which saves application fees plus compliance burdens. That is additional saving that you have. Deferment of duty is not only for export production, but also for local production, which enhances competitiveness in local market as well. People don't realize this. It gives me, for domestic production also, I'm getting deferment. If I am capable of getting a purchase contract with 180 days payment and I'm importing goods, I'm not paying duty, I'm not paying interest. I am manufacturing the goods, selling it in domestic market. If I get immediate payment, I have hardly any cash blockage. Greatest advantage, because MOOWR scheme does not speak of compulsion of exports, no percentage. Somebody wants to set up a MOOWR scheme manufacturing facility under bond and he has no export at all, still you can set it up. There is no problem. There is no compulsion of exports. But if you ask me honestly, If a combination of export and domestic market, you have maximum benefit arriving out of this particular scheme. You will be able to make out your competitive cost, and you will be able to get much bigger benefits than what you normally think. If you are a company with large turnover, the benefits can be in crores of rupees. There is one more aspect. You think of this from a different angle, from a financial angle. If you think, if the money borrowed from the bank is less, your credibility in the share market also improves. Your capacity to pay dividend increases, and you can imagine if your share price goes up, what kind of benefit it practically gives you. Overall, regulatory compliances are also reduced, which results into cost saving. One funny question if I ask you, if you do not take EPCG, if you do not take advance authorization, will you go to DGFT office? Answer is definitely no. You will go to DGFT office only if some product is coming under restricted list. Other than that, I don't think you will ever have this kind of a problem. You have no compliance burden, no additional cost, no application fees. Everything is one time. So these are financial benefits of the scheme. In conclusion, I would like to say, in principle, the scheme is good. It avoids working capital blockage. There is no interest chargeable for deferment period. Location can be anywhere. This is a major relief. If properly implemented, this can reduce transaction costs. All things are in your favor. And if you want to promote both your domestic market as well as your export market, this could be a very good scheme. Don't worry about audit. Audit happens under any circumstances, any company, this or that audit is bound to happen. Don't worry about audit, bother about how do you keep the accounts properly. There is a standard format of accounting given in the scheme. You have to maintain that. And if you maintain it properly, most of the companies can maintain, because everything today is electronic. You have every single detail. And sometimes you should laugh also. Think about one thing. If government wants to find out, they can find out your call logs. Every single call that you have made in your lifetime can also be recovered. If that is the case, why are you worried about what is getting recovered as long as things are okay? As long as you are compliant, as long as you are legally looking at operations properly, you should not worry. My request to you, take proper advantage of this scheme, avoid blockage of funds, and make sure that you work. It's my habit to give a thought. Today's thought is little different. No one can save us but ourselves. But then Buddha says, no one can and no one may. Why? We must walk the path alone. Alone means not singularly walking the path along with truth, along with compliance. If you do proper things, you need not worry at all. I extend my wishes and gratitude to TEXPROCIL for giving me this time to interact with you, and hope this will practically help you understand the entire system of MOOWR scheme. If you still have some questions, I would definitely like to answer. Thank you so much.
Wonderful, wonderful, Sudhakarji. I mean, you made it very simple. And my friends, as you would have seen, it's a very important scheme, deferment of duty, where and cash flow management. So, and the ability, whether you're doing export or domestic. So all those are combined into one particular arrangement. So therefore, it's a very important scheme. And I must say, I don't think anybody could have made it as lucid and very simple and at least to understand as Sudhakar did for us.
Society.
Hello, who's this? Can you just, though now we come to Q&A, questions, please ask queries, questions. We will be sharing the PPT with everyone, so that because there are technical things there, section this, section that, Customs Act. So there will be, obviously, you need to refer to that. So that we understand, and we will surely be sending it to everyone. So kindly read it very carefully. Kindly also try to understand. But today, as we sit here, and what you have been able to understand from Sudhakarji's presentation, you please feel free to ask queries. Don't worry about it. One question we would like to ask, in fact, I was asking my colleague, as you begin this journey under this scheme, you have to file a bond of triple the value of the custom duty. So, therefore, to some extent, there is a financial commitment you make. Is that correct, Kasturi sir?
Yeah, but
How does that get played out?
that
How
is
does
commitment.
Ah.
It is like telling your father-in-law that I will keep your daughter happy. If I don't keep the
Is that
daughter
only
happy,
that?
keep this bond.
Does
As
it
long
mean
as you
only
keep her
that, or
happy, you need not worry about bond.
the bond doesn't come with some, I have to file some money with that?
No.
No, you don't. Okay, just a bond. Oh, that's nice. That makes it. I mean, that you're right. Correct, right. The example you gave is just the ideal one. You promised to keep things good and well. Any other query? This is one we had because when it was constantly being said, custom duty is deferred, custom duty is deferred. If you take a bond from me and with a value, am I not paying you some money? So that has got clarified. बोलिए next one. Vineet Mohta ji, बताइए sir. Can we keep both imported and domestic bought goods together in section
Yes.
65
No
era?
problem.
Yes.
No problem. Keep accounting, that's all.
Answer yes. Refer DGFT 1920. Directive seems restricted on export of goods manufactured in warehouse under section 65.
Yeah, you have to take up this issue if a particular product is specifically said. Because again, the MOOWR scheme is more or less in technical terms similar to UOU. If you allow UOU to take RODTP, why section 65 unit is not allowed?
Good point.
Yeah.
Good point. Maninder ji, बताइएगा ये, write to us or tell us. We'll take it up. There's no logic according to Sudhakar ji. So
No, because for UOU you are granting RODTP.
correct.
So why you are not granting for section 65? It is a probably while amending DGFT is not taken into account section 65 units, and one reason could be that there are not many units. That is why they may not have taken it.
Good point. Good point. Yeah, that's it. Any other questions, sir?
Sir, I have a question. Is this application process online or it's offline?
It's online.
It's online. IceGate.
Inspection will, yeah. Principal
IceGate.
Commissioner.
Okay.
Yeah, you can look at it. It's not a problematic issue.
Duty drawback, sir, I don't think is available, you said, no?
No, duty drawback because you are not paying the duty. Where is the question of drawback?
Correct. So that answered. Converting old unit to MOOWR is a Herculean task. Existing raw material, capital goods, वो सब inventory देना पड़ रहा.
तो देना पड़ेगा ही. उसका क्या option है? You
नहीं,
do
raw material का बता रहे
at a later date declare that this is already imported, already installed.
Some accounting has to be done.
Yeah.
Can we sell good imported under 65 and sell raw material itself to domestic by paying duty
Then-
but not?
No, then the interest deferment is permitted only for 90 days.
So he
The
has
way
to
it is
manage
done in a public bonded warehouse, same way you are allowed to do. Because there are units operating and doing this.
Vineet ji, is it clarified?
Yeah.
Question. Okay, thanks.
Like, come in, sir. This is Salil Chawla, DFE publication.
Yes.
Yeah, thank you.
बोलिए साहब.
Yeah, thank you so much, sir. First and foremost, I have to compliment TEXPROCIL for taking up very relevant and pertinent questions, and I have liked it, the series of it, one after the other. You are doing a great job for the trade, because this kind of information, because many times disinformation, misinformation is there, especially in these tough times. It is important to make all these documentation, obligation, regulation, compliance part, the facts straight. So you're doing excellent job. I could not resist myself, complimenting you.
Thank you, ji, thank you. Tell us a question, sir.
No,
सवाल
there is
क्या?
no question. I just wanted to appreciate Sudhakar ji for being so patient and modest, sir.
Thank
Very
you, thank you.
lucid and informative, insight.
Kasturi Saab is very, very clear. That is a great point of having him speak. Bada
Thank you so
clarity
much.
है इनके mind में. So we are all clear then. Once the speaker is clear, everybody is clear. But even those who listen to him also get clarity.
God bless you all.
Maximum time allowed to sell raw material is 90 days. From entry to warehouse, not bill of entry. 90 days from the entry to warehouse.
Yeah, traded goods 90 days.
Entry to warehouse or bill of entry से?
No bill of entry date.
ये अच्छा, okay. Okay, from the bill of entry. So it might have entered your warehouse later, but the date on which it was imported is important. Is that correct? 90 days वहां से शुरू होता है. Okay, is that clear? For exporters, rod tape screw delivery will continue for MOOWR scheme holders.
Yes, it will continue because
Yes.
the logic is same. Sab, you have to take this up with DGFT because they made two mistakes. Let me tell you those two mistakes. In the first case, they have added advance authorization, EOU, SEZ, but they have not added the word DFIA. Customer started issuing notices that you have availed DFI. Now, what is the difference between DFI and advance authorization? I am getting the same benefit of customs duty. How it is connected with road tape doesn't make sense. So this and this particular issue, that why even depreciation issue. Currently, this MOOWR scheme does not allow depreciation on capital goods. You should take this up because practically capital goods get depreciated. So why you don't? I am complying with otherwise.
Well, we'll take that up. I think now that the scheme of one question, please go ahead, Mr. Komal. बताइए. Mr. Komal Panwada. Please go ahead, sir. Put it in the chat box or come live. Mic on कर लीजिए.
राकेश उनका
इनको on करो mic.
प्लीज
इनको just on करो mic.
थैंक यू सो मच एक्चुअली आई वाज जस्ट वेटिंग आप मेरा माइक ऑन कर दे तो अपना क्वेश्चन पूछ पाऊं.
हाँ बताइए, आपका इनको on कर दिया, हो गया?
हाँ जी एम आई ऑडिबल सर?
Yeah, you are.
थैंक यू सो मच सर. मेरा क्वेश्चन जो है वो ये है कि जैसे सपोज वी आर द एक्सपोर्टर, अगर हम मूवर फैसिलिटी लेते हैं तो उस टाइम पे जो हमें ये बेनिफिट मिलते हैं, तो क्या ये हम लोगों को जो एक्सपोर्ट फिट मिलता है ड्यूटीज के ऊपर गवर्नमेंट ऑफ इंडिया से, क्या वो सेम बेनिफिट हमें मूवर में भी मिलता है?
You are muted, sir. सुधाकर जी, you are muted. इनको unmute करो. Unmute करें सर, unmute. हाँ.
जो बेनिफिट आपको मिलते हैं, एडवांस ऑथराइजेशन मिलता है, आप ड्यूटी भरते हो, ड्यूटी आपको एग्जम्पशन मिलता है, या आप ड्यूटी भरते हो ड्रॉबैक आपको मिलता है.
हाँ जी.
ये दोनों चीज में आप ड्यूटी भर ही नहीं रहे हो, तो ड्रॉबैक जो भरा नहीं उसका रिफंड हो नहीं सकता, ड्रॉबैक मिलेगा नहीं. और एडवांस ऑथराइजेशन में ड्यूटी एग्जम्पशन होता है, उसकी जगह डिफरमेंट होगा और डिफरमेंट 0 हो जाएगा, आपको वापस कुछ करना नहीं बिकॉज यू आर एक्सपोर्टिंग द गुड्स. तो पॉलिसी के बेनिफिट्स आपको मिल रहे हैं, खाली प्रॉब्लम आ रहा है आरओडीटीपी का.
हाँ जी सर, हाँ जी सर.
तो आरओडीटीपी का आपके साथ डिस्कस हुआ है, he'll take it up.
No, it's a good point. It has emerged today. We'll take it up. I mean, why has it not been given? हम लोग उसको
थैंक यू
और बताइए. The good point which has come up today. हाँ जी बताइए. और anybody else, sir, please feel free to ask queries, questions, because it is the interest of the trade and industry. आप इस बात को समझे तो आप ही का भला होगा. You will be able to use the scheme. How value adopted
under the scheme. वही बात चल रही कि डेप्रिसिएशन शुड बी अलाउड. डेप्रिसिएशन अभी तक अलाउड नहीं हुआ है, वैल्यू वही लेते हैं. अगर आप री एक्सपोर्ट उसको करते हैं तो फिर प्रॉब्लम नहीं, बिकॉज गुड्स आर नॉट कंज्यूम्ड इन इंडिया. एट द एंड ऑफ 10 years 15 years, इफ यू आर री एक्सपोर्टिंग द कैपिटल गुड्स, तो ड्यूटी भरने का कोई सवाल पैदा नहीं होता.
कहने का मतलब है डेप्रिसिएशन नहीं मिल रहा. वन वे ऑफ डीलिंग विद इट इज टू ट्राई टू री एक्सपोर्ट कर दीजिए बाहर किसी थर्ड कंट्री में आफ्टर 10 years और जो भी है, तो आपको वो ड्यूटी नहीं भरना. इज दैट राइट सर?
या
करेक्ट. चलिए, इट्स एन इंपॉर्टेंट पॉइंट. व्हाई डेप्रिसिएशन इज नॉट अलाउड? वी कैन आर्ग्यू दिस केस. लेट्स सी व्हाट द डिपार्टमेंट. ठीक बात है. तो good queries have come today. और बताइए सर, anybody else? I think we've had a good session today.
Hello.
Yes, go ahead, please.
Hello,
Introduce
sir.
yourself.
I'm Deepak Sood from Vardhaman Textiles Limited.
हाँ बोलिए
Sir,
बोलिए.
I have one query, sir. What would be the treatment as far as the insurance is concerned for all these products, rather like capital goods and raw material, whether the ownership is of the industry or it is still the ownership of the custom department?
No. It is the ownership of the industry.
So,
Custom is only giving you duty deferment. In other words, duty is payable if you do not comply with the rules.
so we have to take the insurance of
You
the
have to
custom
take
duty
the
portion
insurance on
also.
your own, yes. और
Okay.
मेरी आपसे रिक्वेस्ट है कि जब आप इंश्योरेंस लेंगे तो इंक्लूसिव ऑफ ड्यूटीज लीजिए.
Both custom duty and as well as IGST, huh?
Yes. जैसे आप नॉर्मल सर्कमस्टांसेस में लेते हो.
जी. Thank you, sir.
थैंक यू.
Sir, there is a question in chat box. Can you please
Yeah.
admissibility of drawback if finished?
Yeah. What I think the question is, if some material is duty paid, the case will be similar to advance authorization, and the only option available to you in such cases is make a case for brand rate, because you are not getting every single item without payment of duty. You are saying 80% I am getting without payment of duty, 20% I am getting with payment of duty. So you have to apply for brand rate in such cases.
Correct. Quite right. Because
Scheme does not deny that. Scheme does not anywhere denies that I will not give you. But fixation of rate will be a case.
So I think there are no questions.
Correct.
We can.
और बताइए साहब. I think we had a very good discussion and 2-3 very good points have emerged, for clarity. I must appreciate even the questions which have come. They are quite good questions. Obviously, you have applied your mind. और सवाल हैं तो बताइए. Otherwise, we will sort of wind up this session. We've had about hour and a half. और कोई queries हैं तो आप mail कर सकते हैं हमको. We will share the PPT with you. We will also put out a small circular Q&A वगैरह हम आपको दे देंगे, so that post the session you can have some notes to look at and study. May we get MOOWR selective or have to get the same for all sheds? Multiple sheds.
That means ultimately you are saying multiple ownerships.
No, multiple manufacturing sheds in a single premises.
That
So
is
एक ही
possible,
owner का-
provided you have a compound properly.
Okay. That's why you were saying the boundary wall.
Yeah.
Parity, the scheme has that provision. So I think yes, we can always look at this very closely. So I think the scheme is to be understood. There's a detailed guidelines available, which we will also circulate with our note. एक PPT के साथ हम आपको ये भी दे देंगे. Our objective is very clear. Kindly read it, understand it, check where your business is. Can you benefit from a scheme which has been announced? Idea is to sort of, even if you are import dependent, they don't have to pay import duty, custom duty, and save on your cash flows and work a little intelligently with all the inputs that you may secure domestically as well as from imports. And as far as domestically procured inputs are concerned, अगर उसमें कोई drawback है, तो well, brand rate का बात उन्होंने बताया, we can always look at that, because you will have to get a rate. It'll be difficult to get one single. If there are many people in the game, then obviously they can give a rate for, sort of an all industry rate for that portion, like they have done for garments when they're operating into the advance authorization. तो उनको एक special garment को वालों को एक rate मिला हुआ है. तो उसी तरह से हो सकता है, but depending on the number of people you use the scheme. So I think we can wind up this session. Thank you, Sudhakar ji.
Before that, we
There's one more small point somebody raised. I will give you the forthcoming webinars we are having. We have embarked on this journey of webinars so that we are in touch with all the members. We invite all of you to participate so that you not only become members, but also try and understand subjects. The upcoming webinars which we have planned, and especially the next one, which will come on 29th of May on the ELCG scheme 5, ECLGS 5. That's an important one which they have announced. So we will have a discussion on that. Z certification and MSME scheme is also equally important. We'll do that on 19th of June. And there's one on the Incoterm rule, that is the terms of delivery. There are some changes that we are planning for the 19th of June. In the meanwhile, for all those who are on the call, on 25th of May, TEXPROCIL has its award function at Hotel Leela from 2 p.m. onward, 12:30 to about 4:30. We have lunch there. The Honorable Finance Minister is coming as the chief guest. So all of you are invited. If you are based in Mumbai or if you are from outside, please do see whether you can come. Our doors are open for all of you. You're most welcome. So with these few words, I thank you again for all your attendance and look forward to our meeting again, maybe on the 29th, if not on the 25th. We've also started an online, I don't know whether you heard, you have come across, but every Friday, we've got a session where we invite the exporters with their issues, and they should to meet us over a video call. If you have that thing, you can put it out. Can you put out that small promo?
Yeah.
So that we answer queries. We encourage you to come up with your issues on an online so that we can take them on board, and then we can try and take it up with the relevant department or try to assist you here itself with our experts who are in the office or outside that we will also be sort of inviting. Can you put that out just for a minute? I'll just seek your attention. Every Friday between 2:30 to 3:30, there is some kind of an open house we have, which is what this is called, weekly video conference facility, which is there on the weekly video conference facility, direct interaction with our people, various issues, membership, RCMC, trade, advisory. So we are trying to promote this so that we are more and more in touch with our members right across the country. You're most welcome to log in. We will send you this again. Once again, it will be put out. Yeah. Already a circular is gone. Those who are not members of TEXPROCIL can also try and join in. And we'll only request you to become a member of the council as we go along. So this is what I wanted to tell you. So with these few words, thank you very much for your attention. And thank you very much for joining. Till we meet again. Thank you, Kasturi Saab. It has been very illuminating, very enlightening, and you really put things in very, very simple language where all of us could understand things. Thank you, sir. Thank you for your presence. Thank you very much, friend. Thank you.